In this episode, we're talking about our team's investment philosophy and what we feel you need to know to be a successful investor.
Access granted. Access granted. Access granted.
Welcome. This is episode 5 of Access Granted. It's a very special episode. It's one of our all access episodes. Today, we've got our team's portfolio strategist, Craig White, my brother, here to talk a little bit more about our team's investment philosophy and what we feel you need to be a successful investor. For those who don't know how our team operates, is we really believe in specialized advice, and in fact, that was one of the main reasons why we've brought on such specialists like Cedric Paquin, our tax planner, and Craig, our portfolio strategist, a few years ago. So today we're going to give you a little bit more insight into what Craig thinks about investing, and might as well jump right into it. Craig, just on a high level, what would you say is, how would you describe our team's investment philosophy?
Sure. So we practice a very specific style of investing. And in investing circles, it's commonly called value investing. And within that, there are different types of value investing. The branch that we follow, there's a lot of been very famous investors who have invested that way. Probably the most famous of which is Warren Buffett. And there's really 3 core things that we're looking to do, and it's not very complicated, but the 3 core things are: we want to buy quality companies, we want to buy them at good prices, and when we buy them, we treat it as if we're the owner of a business. We don't treat them as just pieces of paper that we're trading. And I think part of the reason why we do that is we feel like it's the best way to get the value out of the business, get the best return on our investment. A lot of people, I think, can make money trading stocks in the short term, but as a long-term strategy, I like our strategy much better.
Right on. With that in mind, what are the types of things that you're looking for when we're looking to recommend an investment for a client or for whoever? What are the key points that we would be looking for?
Yeah, so the first thing that we always look at, first and foremost, and maybe the most important thing, is the price. Because if we're overpaying for an investment, it doesn't matter how great a company it is or how great an investment it is. If you overpay, you're not going to make the return that you need to make. So price is the first thing, and within about I would say 5 minutes, I can look at a company and say, is the price attractive enough that we want to look further at it? So assuming that there is a good price on the table, then we would look at more in-depth things. So, when I talked earlier about quality of the company, there's a few things that go into the quality of a company. We like to know that there's a long-term track record of profitability because that gives us comfort going forward. We want to know that there's quality management in place so that they're ethical and that they are effective, and also that they're shareholder-oriented. And in an ideal world, we also want to know that it's a good business. And part of having a good business is if there's a moat. So a moat is just like a castle. A moat on a castle is designed to protect the castle. Well, a moat for a company is designed to protect their market share. And there's lots of different kinds of moats. Could be brand, could be technology, could be pricing power. But we're really looking for those types of companies because we feel that those are the best chances for us to get a good long-term return on our investments.
Yeah, I think that's, the moat is one of the key things that we talk about a lot. Just recently, I remember Warren Buffett talking about Apple and the moat that they've developed around some of the devices that they produce, and how it's very difficult to basically for another company to get into that market because Apple's built up such a good moat. Like, people have iPads and iPhones, and it's very difficult to crack into that market. So, that's the type of stuff that Craig's getting at with moats and what really is protecting that business and their core market share there. So,
yeah. And actually, like the classic example is right out of Berkshire Hathaway, and the one that Buffett always uses is Coca-Cola, because Coca-Cola has such a strong brand that people will pay more just to get a Coke can than a generic cola brand. And you could argue about taste and all that stuff, but for the most part, people are buying that Coke can because of their brand, not because of any other factor. And that's a moat that Coke has that would be very difficult to compete with.
With that in mind, and thinking about what we feel are some of the things that people should be looking for when they're choosing an investment, what are the things or the common mistakes that you've seen when looking at other people, how they've done their own investing, or what are the common traits you've seen when people haven't been successful with investments?
Yeah, and there's really two major mistakes that I commonly see with more I'll call them amateur investors. And the two mistakes are trying to time the market, which is extremely difficult and I would argue almost impossible to do. And the difficulties with trying to time the market is there's just so many factors that go into what the market is doing on a daily or monthly or even yearly basis. It's very hard for us to factor in everything we need to say, okay, this is the market's rock bottom, or this is the market's peak, and this is the point where we're going to be buying or selling. So timing the market generally I think is not a good idea, and I don't think it's necessary to do to get a good return. The second thing is people tend to act very emotionally and about their investments, and it is very personal. Like most people, when they're saving, it's for their retirement, and nobody likes to see losses in their portfolio. In fact, there's lots of studies that have been done that people actually feel the losses 3 times more than they feel high on the gains. So we're just wired as a species to really suffer and feel pain when we lose money. So that emotional feelings is what drives bull markets and drives bear markets, because when markets are good, people tend to be over optimistic, and they also have a fear of missing out on the good returns, so they pile into the market and drive prices too high. And vice versa, when the market turns and the prices fall, people really feel that pain and they just want the pain to stop, and they end up selling probably at the worst possible times. And I think that's where a more experienced and maybe a more knowledgeable investor has an advantage, because they won't do those types of things.
Yeah, like we talk a lot about patience, and I mean, the reality is, I mean, it's very difficult for people to have patience around this stuff because it's their human nature is fighting it. But I mean, that's a big part of what we do on our team is, sometimes we call it hand holding, but really just making sure that our clients stay on point, stick to their strategy that we've developed with them. And having the patience to see it through. It's not always easy, and we get that, but I think that's what you're getting at is where people can often fail quite a bit is just not having the patience to see their strategy through and jumping from one strategy to the next strategy to the next strategy and trying to predict what's going to happen. Mm-hmm. I mean, it's no secret nobody has the crystal ball out there, and not Warren Buffett, not large corporations, not large multi-billion-dollar portfolio managers. Nobody has it, and so setting a strategy is ultimately the key, right?
Yeah, and I think with getting a more expert knowledge of an investment, you get comfort, because if a company that we've bought for a client drops in price, well, that's potentially a good thing because it means we might be able to buy more of it. But if you don't know enough about the company to know why it's dropping, then you really do feel that pain, and you're worried that you're going to lose all your money in it. And that's hard to sometimes resist that temptation to sell.
So this is a question that I've actually taken from somebody that we follow. His name's Preston Pish with the Investors Podcast, and he always asks his guests this at the end of their podcast. But so I'm going to ask it to Craig because we're both big fans of theirs. So what is the best investment advice that you've ever received from somebody?
Yeah, and I actually think it might come from that podcast. But the best advice that I ever got is it's not just about investing. This is about life. But you can never stop learning. And I read for hours a day on top of what I do for my work. And the reason that I do that is because I know that you need to constantly keep learning, and it's not just about investing, it's about other things as well. And if people are looking to get into investing, some books that I'd recommend, definitely go read The Intelligent Investor. It's absolutely the Bible when it comes to investing. And go read Warren Buffett's shareholder letters. You can get like an MBA worth of education just from reading his letters. And I can't tell you how much knowledge and expertise that I've borrowed from those two sources that I use every day when it comes to investing. So,
right on. Good advice. So with that, I think what we'll do is we'll just summarize things. I always tell clients that on our team, and this has come from development and working with Craig, but the keys that we have three core rules when it comes to investing, which is we can never put our clients' money into something that we're going to have to sell at a lower price or at a loss. We only buy quality assets, and we only buy quality assets at good prices. And I think that's a testament to what Craig is talking about with our philosophy here. So 3 simple rules that really guide us in every decision we make. So with that, one last thing is that we're really excited to be going to see Warren Buffett this weekend, actually, and checking out the shareholders meeting. As you can probably guess, he's a hero of our teams, especially a hero of Craig's. And so this is going to be a really exciting experience for us. So stay tuned because we're going to give you some updates, and be sure to check out our website, cgwfamilywealth.com, for updates, and follow our blogs from there as well. And with that, this is a wrap on episode 5. So ready, aim, fire.
Access granted. Access granted. Access granted. Access granted.